Here it comes from the fabulous penthouse studios of Business 1110 KTEK. This is The Price is Right. This is The Price of Business. Author of the hugely influential Empowerment to the People, award-winning, nationally syndicated columnist, Kevin Price brings a fresh perspective to business news and the events that shape our lives. And now, here is the star of The Price of Business, Kevin Price.
Good morning. I am Kevin Price. Delighted to be with you. Going to spend some time talking to you about you and your business. Bob Loeser is in the house. Glad to see him. You know, it's the beginning of the month when that happens. And Bob is a regular on the program. We call him Taxman Bob because, frankly, he knows a lot of what's happening out there, not only in the tax front, but in the whole fiscal heartbeat, if you will, of an organization. Good to see you, Bob.
Good morning. Good to see you.
So here we are already in June. We're at the end of the first half.
5 months have flown by. I don't know where they've gone, but at the same token, we've gotten past our tax deadlines, or at least the first tax deadlines, and we've got a few more coming up, which I recommend to people that are out there that extended figuring, I've got loads of time. Trust me, those next 3 or 4 months are going to go by as quickly as the first 5 months went by.
Yeah, I understand that, and I concur. I think that you're right about that. So talk a little bit about where people should be at when it comes to thinking about their taxes.
Well, if you filed extension, I mean, we always talk about being prepared like a scout. Don't go into the April season, the tax deadline season, without knowing where you stand. And some of my clients, they have what do you mean I owe $18,000? Well, you made $50,000 in the stock market. Did you pay any taxes on it? It's a lot of times it's that those conversations that you have in October, November, December saying, oh yeah, Bob, I forgot to tell you. I did this and I made $15,000 on a stock, or I made $18,000 on this, or I took a distribution from my retirement plan, or Mom passed away, she rolled her IRA to me, and I took her IRA of $50,000. I hope that wasn't taxable, was it? Of course it's taxable.
What, is it money?
So in a lot of instances, I recommend to my clients, make the phone call and ask me if it's taxable. The best off I'm going to say is no, it's not. And the worst off is I'm going to say it is, and this is how much you have to set aside for April 15th.
Yeah.
Okay.
So you can plan accordingly. So you can be surprised rather than disappointed.
Correct.
Yeah.
Correct.
And so that's probably, how often does that happen during any given year?
Well, if we do, let's say rounded, we do about 700 tax returns a year, I'd say it happens 15, 20 times. So 3%, at most, which isn't a lot, but you have to sit down and explain to these people why they're not getting the refund they got last year. And then they sound sort of disappointed in you, and it's not your fault.
Right.
You're just the bearer of the bad news.
You're just the messenger. Don't kill the messenger.
Right.
And so, it's interesting that adults, particularly adults in business, almost have, these kind of naive attitudes about things like that. Right. These rainfalls that come
right.
up.
And even so, for example, this past week, we had a situation that the client was supposed to pay. We gave him the little estimated tax slip with a memo saying, well, you need to write a check for $60,000 by September 15th. All right, we assumed he did it. Mm-hmm. Right, he assumed he did it. His office manager assumed he did it. All right, IRS comes back and says, we don't have a payment. So then when I have them check, his response was, well, first off, it was something like, well, you didn't tell me. And then I sent him the emails, the follow emails, and then his manager sent him the emails that she sent from me to her to him and said, we've both got him. You just dropped the ball.
Yeah.
And he said, all right, fine, we'll settle it. My apologies. That sometimes happens. It falls through the cracks. They understand. They understand that with their busy schedules, something is missed. But it's not something that is on our end that we failed to tell them, and then there's a penalty. I mean, if that was the case, then I hate to say this, but we'd stand by our clients and say, if we cause that penalty of $900, we will write the IRS a check for $900.
Yeah.
All right. That's just what good business people do.
Yeah, absolutely. So that's where we are on the tax front. Talk a little bit about, planning in terms of other areas of taxes and beyond the income tax space.
Well, I mean, you've got certain things. Of course, you've got your quarterly payroll, and the IRS has become very stringent on their rules and regulations about if payroll was today, how long do you have to pay them their their check or what I call it's their deposit, that electronic deposit that comes out of your business account to the IRS. And in a lot of instances, I tell my clients, even though you may not owe it the very same day or the next day, do it so it's out of mind, out of sight. A lot of times you forget about it, and then it's a long Memorial Day weekend, and then you come back, and then by the following Friday, you've forgotten to make that deposit that you should have made on Friday last week, but you were holding off to Tuesday, and now you're 3 days late, and now it's a 3% penalty on $5,000.
Right.
It's not a lot of money, but it's $150.
It all adds up over time.
You do that 8 times a year, that's $1,200. Okay, that's what? 2 car payments, whatever the case may be.
Significant down payment on a used car.
Right. You push in recommending that your clients stay on focus on that. And then things like sales tax, of course, is due the 15th or 17th of the following month of sales, unless you're a quarterly sales person. And then, of course, you got the franchise. And the franchise is taxable if taxable income is over gross income is over 1.1 million.
Yeah.
All right. And I've told you the situations before where people have gone over that 1.1 million, but they've lost $200,000 for the year, but the net result, because of this California tax that they copied and bringing to Texas, you could owe $5,000, $6,000, $8,000. All right. And I remember the client jokingly said, "I'm going to send mine in crayon, and I'm going to tell them with a note that I can't pay this. I lost $250,000 this year." Right. Yeah. So
that went over real well.
It went over real well. Okay. It's sort of like being prepared. But we're getting into other things. Like I had a client call recently about their property tax out in Fort Bend County. And what happened was they bought some land in Siena from a developer who then developed the house. All right. Upon closing, for whatever reason, they didn't transfer over to the county that now this was a 1 acre piece of land with a 4,500 square foot home on it. All right. So for a 2-year period, they got invoiced for just the land. Now, did they know about it? Probably. And they said, well, gee, if I can get away with this, great. But then what happened was the county came back and said, well, now the property value is this for those 2 years, and now you owe us penalty and interest. And the fight is, can they go back and have the penalty and interest abated? Because although they knew about it, and if they knew about it and been given the invoice, they would have paid it at the time. Because they didn't, they agree that they owed the tax. That's not an issue. All right. But why should the assessment of the penalty and interest be there? Because it wasn't their fault.
Yeah.
Again, I realize the buyer beware, but in the same token to this, if you don't shake a stick at them and say you owe it, all right, and then tell them 2 years later that they owe it, why should there be any penalty and interest up until the point they're notified that they owed the additional $8-10,000 in tax on the house? So it's kind of interesting as these things develop as to where the counties stand and what they will allow or not allow you to get away.
So with just a few minutes left, the Libertarians chose their candidate. I'm sure you saw Gary Johnson and William Weld.
All right, and then what was the third party candidate that I saw a night or two ago? David French. There's some muttering that and they had it on, I think it was Fox, that there was going to be a third alternative or whatever. I mean, I think it should be a doubles tennis match.
A doubles
tennis match.
Yeah.
Okay, take the three. Take the Republican, the Democrat, the tall guy, the short guy, put them together, draw straws, and maybe 5 out of 7 sets, the winner takes all, and becomes president,
Who's
vice
the best
president.
tennis player that
I
I'm
have
afraid
no
it's
clue.
probably Trump, actually. Just because he looks like the type that would probably play tennis.
Right.
So,
right.
I don't know about that.
Yeah. Right. Or he'd take the hamstring out of his opponent and make sure he won.
But where's the Trumps when you need them?
I know. Did we let that guy go?
He got going because we were too busy enjoying our conversation. Yeah. So, a very credible ticket. It may end up being the most credible ticket as a Libertarian one. 2 former governors, 2 successful former governors.
I'm just what's his name, Gary. You need to light a fire under him, and even I think if his pants were on fire, he'd smell something, but he wouldn't move. He's
a little underanimated.
You think Jeb was underanimated?
Yeah.
This guy is like, what day is it? No, I'm not. I'm not.
Well, he's a big fan of marijuana, so
Moved to Colorado, man.
He's a big fan of marijuana, so maybe he's actually using the product too much. I don't know, but Smart guy, very, very good governor. But yeah, I can see that. It's hard to excite people with
I think the whole bit right now, and we've talked about this in the past months, is the liking of Trump has to be blunt with his loudness. I mean, people want somebody to stand up, put their fist through their desk and say, we're not going to take this any longer.
Right.
Instead of, everything is fine in another 4 years of this, and we'll take over the gun control, and we'll put 2 or 3 Supreme Court justices in so that we'll tell you when you wake up what you're going to do every day.
Yeah. He's almost kind of like modern Howard Jarvis. Remember him back at Proposition 13 and that in California?
Right.
Who went ahead and, in Trump's case, went to the next level and actually has money to do something about it.
But I still think, despite yours and my differences of opinion on Trump, I think he does the same thing, if not better, than Reagan did by putting, if he is elected, putting people in place that they can handle his situations. Okay? Okay.
So that would be a doctor with really heavy narcotics to keep him subdued.
But I mean, people like the medical field, Ben Carson on staff, and whoever the VP is going to be at this point. I mean, I think he's narrowed it down, but I think he's getting people. I saw McConnell on Squawk Box or Squawk in the morning this morning, and he was very positive about Trump as to getting the Republicans.
He's a party guy, so he's going to
correct.
He's going to keep things in line. It'll be interesting. It always is interesting when Bob Loeser comes here. I'm always glad to see you.
So thanks.
And
thank you so much.
Taxmanbob at pdq.net. That's taxmanbob at pdq.net. Your number?
713-953-1272. 713-953-1272. Operators are waiting for your call.
Always glad to have you on. When we come back, much more for you. I do want to remind you, best content here does show up over there at usdatareview.com. While there, like it on Facebook. Follow it on Twitter.
There's one for you now.